Traders, welcome back to my channel. In this video I'm going to be sharing with you this sniper entry strategy, how you can be able to cash a swing trade or you cash a day trade making more than 100, 200 to 300 pips in one single trade, guys. You can see this is an example of a trade that we took, and I can show you before. This is before in the VIP channel. This is where we estimated that price was going to turn from, and price did just that, guys. And if you look at it, you can use your trend lines and other examples or other confirmations to know where price will turn. So this is what actually happened. Price got here and did just that. As you can see, this applies to all markets, guys. This applies to all market, and this is what I'm going to be sharing with you so that you can be able to use this strategy and grow your account. You'll be able to catch a lot of pips in one single trade. So once you watch this video to the end, if you trade the forex market, indices, whatever market you trade, this is price action, this is SMT, this applies in all market. So make sure you watch to the end. Subscribe to this channel by hitting on the subscribe button and notification bell. See you after the intro. Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. So guys, this is our chart before, right? Now, whatever type of trader you are, whatever market you trade, guys, there are things that you should never forget when you are doing your analysis. One of those things is knowing the trend of the market, right? So if you look at US30 here, for instance, you are going to see that we are in a clear downtrending market. What does that simply means? It simply means that price is creating lower lows and lower highs, as you can see here, right? It creates lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, right? And now it simply means that we are in a downtrending market. Here we were in an uptrending market, and if you are trading, you want to take a trade that is going to run for days or to make hundreds of pips in one single trade, then you want to ensure that you are trading with a trend. Now there is an exception when you are scalping. There is a possibility that during scalping you can trade a little bit against the trend. For instance, when price is reversing, maybe in the 1 minute time frame, there's a possibility that you can catch a move against the trend. But if you want to take a trade based on a bigger time frame or to hold it for days, guys, make sure that you are trading with a trend. So this is simply an example of a downtrending market. So at this point in time, price was creating lower lows and lower highs, and now when price creates a lower low like this, there is always a correction. This correction is in order to help many traders or traders who are waiting for price to come back, or let me say traders who actually took their profits. This will cause price to pull back, all right? Because when price move like this, people who sold at higher price like here, right, what happens when they take their profits? There will be no volume to move price again. Price will have to pull back, and when it moves, right, it has to pull back, right? So now we are simply building a strategy based on this. We want to be entering only when price pulls back. It is simple as that, guys. There are many ways in which you can be looking at pullback, because the question will now be, where will the pullback end, right? We know for sure that, okay, since price has pulled down, price is going to be reversing, but where is it going to end? That is the question, so that we should be taking ourselves. Is it here? Is it here? Is it here? So this is what I'm going to share with you guys, secrets on how to know exactly where price will turn, right? You can see how I was able to give that signal. Right now, you can use your trend lines. You can identify what we call order blocks, right? Because those are the zones where the institutions that cause price to drop like this, they usually have their remaining orders that are not yet been mitigated. Mostly price will pull back to this zone to be mitigated for price to the trend to continue. Those are one of the key zones, key factors to consider. You can also consider the optimal trade entry level using the Fibonacci, right? Especially if it coincides. I'm going to share with you. This is as simple as that. Now you see that when price pulled down like this, what happened? What I simply did is I identify first of all my order block, right? My order block here, or my demand zone, is a zone where price actually, or the candlestick that was formed before the strong bullish candle. Now this is simply what I did. This is number one. This is not all what I'm laying emphasis on regarding this video, but I'm going to show you other things. This is an order block. You can see this big candlestick that was formed. Other people will just take their sell based on this. Yes, it's good enough, right? Because at this point in time, you can identify these equal highs that have been created here, which is known to be what our liquidity zone, because that is going to create our liquidity pool above there, right? That is fair enough. You can wait for price to clear this liquidity and move. Now let me go to the 15-minute time frame. After identifying that other block, what happened? You realize that here price is consolidating, and if you look at a smaller time frame, you are going to see this is something like an other block. So in this smaller time frame, this is actually going to fool many traders to be thinking that this is where price is going to be reversing. And the reason why I will not want to enter even if this is another block, because it has not yet reached the 0.61 Fibonacci level, or let me say the OTE entry level. Now as price start pulling back, what do? You simply pick your Fibonacci retracement tool, which is in this section. Look at the left hand section of the toolbox. You click from this top here, you drag below, right, where you drag from this high to this low here, because at this point in time, this is the most recent low, this is the most recent high. So when you drag like that, it's going to plot out levels, right, from the 0.5 level upwards. Those are the areas where you should be looking to be taking sell trades at least. But now if you want to consider a higher probability entry, look at the 0.6 level, between the 0.6 level and the 0.7 level, right? This is what we call the OTE, right? What we call the OTE, the optimal trade entry level, right? So at this point in time, I usually plot out my OTE like this, right? But now if I plot at this OTE, now I looked at it at a situation where, what if price happens to go up and mitigate this other block, which is I've identified it like this other block, right? Because I don't want to neglect this other block as well, right? This is the OTE level and this is the other block. But now if I want to enter based on this OTE level, what happened? If price pull back here, it means that I will have a wide stop loss, because I'll have to put my stop loss like this, which I will not really maximize well on the trade, right? So at this point in time, what I do is I will put my entry at the around the 0.7 level, so that I should be able to maximize on this. And then in case if it falls to be the level of the other block as well, it will still be an advantage for me. So this is where I will be looking to be selling, because as price reverses this level, price should get to this level here, and then we should be looking to be targeting something like this. And that is why I was able to give this sell limit order, right, at us30. You can see around 4247, right? Now when I give this sell trade around this level, what I expect now is for price to mitigate, and then I don't have a huge stop loss. Okay, now I have additional advantages that price is going to make it to this zone. Number one, we have a build up here. This build up, actually guys, I'm sure follow attentively, I'm showing you how to get high winning probability trades in which you can make hundreds of pips in one single trade, right? So at this point, we have liquidity that has been gathering up around this zone here, right? I will probably be entering here, but now if I want to enter here, I'll have a huge stop loss. That's why I decided to use the 0.78 level just immediately above the OTE level, because this is the OTE level between 0.6 and 0 days, right? And that is how we're able to place our limit order. And what happened later on, price after consolidating like this, many people are going to be selling, and when it gets here, many people will sell here thinking that okay, this chart pattern has broken. This is just to lure many people to sell, and it's going to hit their stop losses. Those people who sell here, their stop losses are going to be hit above this zone here, and that will give enough liquidity for price to sell when it gets to this zone. If price does not clear liquidity before getting to a key level, that key level is most likely going to be used as liquidity. Always bear that at the back of your mind. Liquidity is key to price movement. So that's how we are able to place our limit order around that zone there. And what happened? Price usually will execute our order, and then we'll move powerfully in our direction, right? So basically that is what we are going to, or that is actually how we are able to predict this move. And then if you look at it critically, you are going to see, look at the entry here, right, at 42479, right? 42479, that is where I actually 4248. Okay, let's shift it. Exactly, 42479. This is the zone where we place our limit order, and that was what was given in the VIP channel, right? And at this point in time, we got our price executed, and let us see what finally happened. I mean, that's a swing trade. As you guys can see, that trade have been running for a couple of days because we are catching a complete swing. We are catching a complete swing. And what happened in the long run, price has no choice but to break structure and create new lows, right? There are many times where this kind of trade setups you can extend. I don't want to be greedy because I knew that at this point, when we have this kind of pullback, right, when you have this kind of pullback that completes, at least get to this level in a pure downtrending market, there is a probability that the structure will be broken. So price has to break structure and go further. So as you can see there, look at how many pips. Look at how many pips, guys. That is more than how many pips there? More than 300, 400 pips in one single trade. So you don't need many of these trades to be able to make profits. Even if you have losing trades with this kind of winning up risk to reward ratio, you are going to make it at the end. So remember, we first start by looking at what the trend of the market. We see price, what phase of the market is. Is it in a pullback phase or is in a impulsive phase? Now we have impulsive pullback, impulsive pullback, impulsive pullback, right? So at this point in time, we identify it because price was in a pullback phase. Price was pulling back, so we had to identify using our OTE level, identifying our order block level, and then looking at what liquidity to be able to catch this move. So that is how you should do your analysis if you want to catch high risk to reward ratio. This is a very beautiful strategy which you can use and grow your accounts. So if you found any value on this video, or if you found any value, make sure that you support this channel also by clicking on the like button, making sure that you subscribe to the channel if this is your first time, and make sure you share with other traders. Let me know in the comment section below what I thought. See you in the next video.